Good day, and thank you for standing by. Welcome to the GEA Group AG pre-close call Q2 2026. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 and 1 on your telephone. You will then hear an automated message advising your hand is raised. To withdraw your question, please press star 1 and 1 again. Please be advised that today's conference is being recorded. I would now like to hand the conference over to your speaker today, Oliver Luckenbach. Please go ahead.
Thank you very much, Mel, and good afternoon, ladies and gentlemen. Welcome to our Q2 2026 pre-close call. My name is Oliver Luckenbach. I'm the Head of Investor Relations at GEA, and my colleagues Rebecca and Eduard join me for today's call. As today's call will contain forward-looking statements, it will be conducted according to our disclaimer. I will not read the disclaimer, but please be aware of the cautionary language that is included in our safe harbor statement, which is part of our presentations you can find on the internet. We will now address topics which we also discussed during recent conferences and roadshows, and afterwards you will have time to ask questions. Topic number 1, guidance. We confirmed our group guidance for fiscal year 2026, which we released with our full year 2025 results in March. We expect organic sales growth between 5 and 7%, EBITDA margin before restructuring expenses of 16.6 to 17.2%, and a return on capital employed between 34 and 38%. So no changes. Topic number 2, customer industries. Food. The business is looking good. It's a broad customer industry with some smaller applications like poultry showing strength. On the beverage side, the picture is improving in both components and projects. Alcoholic beer is structurally softer, but we see a good momentum in non-alcoholic beer. Dairy processing. The pipeline continues to show activity across both projects and components, and we see ongoing good market development with a big trend currently in protein-rich products. Dairy farming. The general market sentiment is okay, with the US and large farms being the growth drivers. Pharma has been a growth contributor in the first quarter, and the business continues to look good depending on the application. On the new food side, we are optimistic that the positive development continues and we can make further progress later this year. Topic number 3, order intake. We are very confident that 2026 will be again a good year for GEA in terms of order intake. The pipeline looks very promising across the board, so in terms of large, medium-sized and base orders. This supports our confidence of a solid order intake in full year 2026. We had a good start into the year with an organic order intake growth of 6.4% in the first quarter, and we see no reason why this trend should not have held up in the second quarter. So regarding the second quarter, in addition to a healthy development in small and mid-sized orders, we have booked 2 large orders with a combined volume in the mid-double-digit million euro. On the translational FX side, you should expect a smaller impact compared to what we have seen in the first quarter. Here it was minus 3.4%. So for the second quarter, we only expect a slightly negative effect. Topic number 4, sales. We started the year with an organic sales growth of 5.3% in the first quarter, and we do expect an acceleration during the year. As with order intake, translational FX effect should have become smaller. Best guess is also here that it remains slightly negative in the second quarter. Also here in the first quarter, as a comparison, it was minus 3.7%. Topic number 5, EBITDA margin before restructuring expenses. Our EBITDA margin guidance clearly indicates that we want to make further progress with regards to our profitability in full year 2026. So after an already good start with a margin of 16.2% in Q1, we expect further progress in the second quarter. And just to remind you, last year in the second quarter, so in the second quarter 2025, we had an EBITDA margin of 16.5%. That's it from my side, and I will now pass over to Rebecca.
Thanks, Oliver, and hello, everybody. What to keep in mind for cash flow. So that's topic number 6. Just as a reminder, we expect CapEx of around 240 million for the full year 2026, and in Q1 we had 33 million euros. With regards to net working capital to sales, our target corridor is 7 to 9%, and Q2 will most likely be within this corridor. As a reminder, Q1 2026 was 7%. And don't forget our dividend payment, which we had at the beginning of May, where we paid out our annual dividend of 1.30 per share. So the entire cash outflow for the dividend is around 212 million. Number 7, some housekeeping information. Depreciation and amortization before restructuring expenses, we expect for the full year around 230 million. In Q1, we had 53.5 million. With regards to our financial results, we expect for the full year around minus 30 million, and we had in Q1 minus 6 million. The tax rate is expected for the full year between 28 and 30%, and we had in Q1 29%. R&D for the full year, we expect around 3% of sales as R&D expenses. In Q1, we had 2.4%. And now we are happy to take any questions you might still have, and I hand back for that to Mel.
Thank you. As a reminder, to ask a question, you will need to press star 1 and 1 on your telephone and wait for your name to be announced. To withdraw your question, please press star 1 and 1 again. We'll now go to our first question. And our first question comes from the line of Klas Bergelind from Citi. Please go ahead. Your line is open.
Thank you. Hi, Oliver and Rebecca. Klas here from Citi. So my first one is on farm tech. I think you said dairy farming is okay, and you mentioned the US, and then Oliver, I think you mentioned larger farms. What's going on in Europe at the moment? Obviously, feed costs are going up, meat to feed ratio is coming down a bit here. Is Europe still holding in, or any changes there? That's my first one. Thank you.
Yeah, let me maybe start. Thanks for your question, Klaus. Yes, you're right. We have mentioned this. What we are still seeing is that also overall, the dairy farming business, let's say overall, is nothing where we are, let's say, having a lot of headaches about. There are always some dependencies on milk to feed price ratio here and there, but nothing that is really right now a concern for us. So overall, what he said, it's a very healthy and also sound business we are seeing here.
Obviously, you're coming up against a quite tough comp here in farm tech. Do you still think, I heard what you said at sort of the group order level, but do you still think farm tech can grow in the second quarter?
Yeah, at the end of the day, what I said, so we are quite positive, so there's no reason to assume that there's a, let's say, trend that has completely changed to what we have seen so far. Yeah.
Okay. My second one is on, obviously you're still talking about the pipeline looks good, large, medium base orders, very confident, and this is sort of mirroring the comments from management during recent investor conferences. But if you look at nutrition and And I'm thinking the order pipeline here, obviously going into the fourth quarter, if we're looking a little bit further ahead, we're up against a very tough compare, thinking about the Balatno order. Like, do you have those sort of like food security, very large orders that are in the pipeline, like that kind of size that you think that you can realize later in the year?
Yeah. So as I've mentioned at the beginning, so we are actually quite optimistic looking into our pipeline, let's say, across the board. In particular, also with you, what we are currently seeing and discussing in terms of large orders, that we're actually quite positive that also 2026 should be a year with further growth in order intake. For sure, Q4 as a single quarter last year was a very strong quarter with order intake of more than 1.8 billion. This will be hard, let's say, to top. But it's always hard to predict finally when we will be able to book the orders. But as I've mentioned, very good pipeline. We have already booked 2 orders in the second quarter. There's most likely more to come in the third quarter and probably also in the fourth quarter. But overall, Q4 is a very high comp. But on a yearly basis, I see no reason why we shouldn't be able to grow our order intake year-over-year.
Yeah, because I mean, final point here, you did 73 million in the first quarter. Now you talk about a mid-double-digit large order in the second quarter. I mean, larger orders need to ramp a lot here in the second half. But you seem very confident that you will end a lot.
Yes, very, very confident on this. Yeah.
And then absolute final one is just a clarification. What did you say on sales growth? I got interrupted a little bit here when you talked about that for the second quarter.
Sure. Yes. After the start with an already good growth of 5.3%, which is already at the lower end, let's say, of our full guidance of 5 to 7%. We expect an acceleration during the year, and also we see no reason why this shouldn't be also the case then for the second quarter, because we want to get to this range of 5 to 7%, or let's say more in the middle to the higher end of this range. So from that perspective, also quite confident what we have seen so far with regards to good order intake growth. Good sales growth.
Perfect. Yeah. Thank you.
You're welcome.
Thank you. Once again, to ask a question, you will need to press star 1 and 1 on your telephone and wait for your name to be announced. To withdraw your question, please press star 1 and 1 again. We'll now move on to our next question, and our next question comes from the line of Sven Weier from UBS. Please go ahead. Your line is open.
Yeah, thanks for taking my questions. Good afternoon. Thanks for doing the call. Oliver, you talked about beverage. That caught my interest because that's been quite a difficult market for quite some time. And now you start to talk about an improvement here. Can you elaborate a little bit further of what you're seeing there and when you said the non-alcoholic part is driving it, can you go into some more detail about that?
Yeah, I think also if you look into the newspaper, you can really read that at least in some regions, in particular in Germany, there is a certain kind of, let's say, lower demand for alcoholic beer, but on the other side, more demand for 0.0 alcohol beer, so alcohol-free beer. And that is also a trend that, let's say, that we have observed. And that's also something we are discussing with our customers for sure. Yeah.
And maybe just one thing to add here, Sven. If you look at our Q1 results, we highlighted already for the division Pure Flow Processing in terms of the order intake growth in the first quarter, that the growth was also driven by the customer industry beverage. So there are various customer industries, but beverage was one of the growth drivers in Q1 in Pure Flow Processing.
And is the majority of your revenues in beverages from alcoholic or from beer in general, or also non-alcoholic beverages?
Alcoholic beer or alcoholic beverages make only a small amount for us in beverage. If you can think about it this way, like carbonated drinks, all that stuff, or juices, it's also beverage for us. Innocent is a well-known customer, so this also plays a role in there.
Okay, thank you. Second point I had was just on capital allocation. I mean, obviously, share price has been a bit of a roller coaster during Q2. I was just wondering, what management has said during conferences around about capital allocation. We obviously saw them buying shares quite a bit on the management level. And also the pecking order maybe between M&A and buying back shares.
Thank you, Sven, for this follow-up question. So regarding uses of cash, we have this clear, let's say, have divided it here into the 4 buckets. So we said that CapEx is the first one, but you also know that over time we also want to reduce CapEx as a percentage of sales from currently still more than 4% down to 2.5% to 3%. We have also, I would say, very interesting and effective dividend policy. So we want to distribute around about 50% of our net profit to our shareholders as a dividend, and due to the fact that we are expecting rising earnings also going forward, this is also an attractive element of our stock. Then M&A is also but I think it also tells the story that we haven't done anything, because it also means that we are quite strict regarding our criteria. So we look at our own multiple compared to the multiples of potential transactions, and would only, let's say, do an M&A deal, an acquisition, if we are really convinced that it would also be effective for our shareholders. And last but not least, for sure, we are a cash-rich company. We have a strong balance sheet, and that's also something. So share buyback we are looking into from time to time. So from that perspective, that is what we are telling here. And some of our board members, as you have said, they have used the opportunity, because we also had no real, let's say, explanation for the, let's say, not so positive share price development after the release of our Q1 numbers. So they have used the opportunity to buy some shares. That's correct. Yeah.
And is it fair to say that the lower the share price, the higher the pecking order maybe for buybacks then? You could change the pecking order a bit?
It's always hard to say. There are many things you need to consider, as you know. I've just described them. But you also know that also in the past, we have not only talked about share buybacks, we also did them if we thought it would be the right timing. And as I said, this is a topic that is always on a regular basis also discussed on a board level. So that is the normal rule, let's say, we are following. But as you know, in the past, in the meantime, we bought back more than 700 million of our shares. So it's also one of the means, one of the potential uses of cash for GEA. Yeah.
Understood. Thank you. Thanks again.
You're welcome.
Thank you. We'll now move on to our next question. And our next question comes from the line of Min Yang from Goldman Sachs. Please go ahead. Your line is open.
Hi, this is Min Yang from Goldman Sachs. Thank you for taking my question. Just have one question on the margin side. So historically, if we see the historical seasonality, 2Q tend to be quite strong. But taking into the fact that you said at 1Q call that in the first half is probably more of the delivery of the new equipment sales that you take order in full Q last year, should we expect less strong seasonality pickup from Q on Q margin wise? Thank you.
So I've mentioned the margin of the second quarter of last year, so Q2 2025, that was 16.5%. In the first quarter, we have achieved an improvement of around 40 basis points compared to the first quarter the year before. So, and overall, we want to improve our margin. It is correct that normally a little bit more weighted towards the second half of the year, but at least it's our, let's say, our intention to show some kind of improvements always quarter, also over the quarter. So from that perspective, or from what I said, I think one can assume that you can also expect some margin improvement in Q2 this year over the second quarter of last year.
Got it. Thank you.
You're welcome.
Thank you. We'll now move on to our next question. Our next question comes from the line of Adrian Pell from ODDO BHF SE. Please go ahead. Your line is open.
Yes, thank you. Hi, everyone. Just a quick question actually on free cash flow. Thanks for the additional financial information you've been giving, usually. I was just wondering if we should, besides what you said, take something into account, in particular on free cash flow, or does it follow the normal seasonal pattern, i.e., I guess should be improving over Q1? And the second question, very quickly, could you help us a bit with the restructuring amount that is due to hit the P&L in Q2? And the last one is actually on NPE, as obviously this one was a bit slower, I guess, than generally expected in Q1. So should we take into account that conversion from the backlog is improving already in Q2, so expecting a better quarter from a top-line perspective?
Yeah, let me maybe start also with your last one on NPE. As you said, that was, let's say, the starting Q1 was okay, I would say. But I think there's room for improvement. And as we said, you can expect that there will be further, let's say, conversion of order backlog into sales already also starting with the second quarter and then also going forward in Q3 and Q4. On the cash side, maybe I would say that overall for the full year, we are quite optimistic that we will come out with a similar free cash flow like last year, so around about 500 million euros. That has also to do with the large orders where we get a lot of prepayments. And we have talked about the pipeline, which is very promising also for the second half of this year. So from that perspective, I think we can also be quite positive here. And on the restructuring side, we are currently guiding for a level, let's say, around about what we have seen last year. It's hard to say what exactly will be booked or has been booked in the second quarter. That's maybe something we can share then on the 10th of August. Yeah.
Cool. And then very quick one, half for understanding and half to dig deeper into it. So you did say you booked larger orders with a double-digit million euro amount. So that's specifically referring to the very large orders above 15 million euros, right?
Correct. Yeah, correct.
Okay. So it's probably, I don't know, 3, maximum 4 that you probably booked, I guess.
No, sorry. I said we booked 2 large orders with a combined volume in the mid double-digit million euro.
This part I didn't get. All right. Okay.
Yeah.
Thank you.
You're welcome.
Thank you. We'll now move on to our next question. And our next question comes from the line of Akash Gupta from JP Morgan. Please go ahead. Your line is open.
Yeah. Hi, good afternoon, Oliver. Thanks for your time. Most of my question has been asked. Just one follow-up, and that is on the order intake this year. So I think, you have been guiding for order intake growing over last year. And last year we had one very large order from Balatna. And of course, when you have a single order of that size, it can create a meaningful difference to a quarterly order intake. And therefore, my question is that when we look at the pipeline, and I think you mentioned you have very strong pipeline for small, medium, and large projects. But can you say, do we have any project in pipeline of this Balatna order that you booked last year that can create big difference to a quarter? Or these large orders are more let's say high double-digit type of range, and therefore we shouldn't be expecting that much volatility in quarterly orders. Thank you.
Yeah, thank you very much for your question, Akash. So it's not that easy to answer. For sure, there are many different orders we are discussing with our customers and all across the board. Some also in the magnitude of in the low triple digits. But as you know, it's always hard to predict. But the overall, let's say, breadth of our, let's say, customers, you know, the chart we like to show all the time is that we have so many different, a lot of very important opportunities that gives us, let's say, the confidence to make this kind of statement. Regardless if at the end of the year there will be an order in our books similar to the size we have seen with regards to Balatna, or maybe a little bit smaller, but overall we see a very good and strong pipeline. Yeah.
Thank you, Oliver. I think your line was breaking in between, but I can follow up afterwards.
No, probably not. So we should, because then we are and also quite strict in this. So can you hear me now? Then I'm happy to repeat what I said, or maybe Rebecca, you can.
I mean, what Oliver was referring to, Akash, is actually the slide in our presentation where we're always sharing that the single largest customer is just about 2% of our sales, or the actually top 10 customers to just account for a really small percentage of our overall sales, just highlighting how, let's say, independent we are from a single customer, and therefore actually have this quite promising pipeline in different projects across different regions and customers and customer industries.
Thank you. So maybe if I can clarify, when we look at your pipeline, it's not like we are, like if you have to look at the risk to your order intake guidance, then it's not like we are just looking for one or two large or very large projects that can make or break when it comes to you have a very diversified pipeline.
Yeah. No,
Exactly.
correct. Yeah. So that's not the case. So, yeah.
That is very clear. Thank you very much.
You're welcome.
We'll now move on to our next question. And our next question comes from the line of Uma Samlin from Bank of America. Please go ahead. The line is open.
Hi, good afternoon, Oliver and Rebecca. Thank you for taking my question. So I just have a follow-up on revenue conversion on NPE. I guess, last quarter it was quite, you mentioned the conversion was poor because of project phasing, and would we then expect Q2 to see already a normalized phasing in terms of both, revenue and margins?
Yes, maybe I just take that. I mean, in terms of the organic sales growth in the first quarter in Nutrition Plant Engineering, you're right. They started the year with -4.8%. And what we already stated at that point of time, that we expect an acceleration in terms of sales conversion, so actually converting the order backlog into sales, also already starting with the second quarter. And I mean, that we also kept the guidance for this division for the entire year. So the guidance for Nutrition Plant Engineering in terms of organic sales growth is for the entire year 7 to 9%. And I mean, if you start the year with -4.8, you can assume what kind of acceleration needs to come.
That's very clear. Thank you very much. I guess just a follow-up, given I couldn't hear you very well in the last answer on the order intake side. So if I just ask it slightly differently, so if we include the large order that you took last year, I guess because you don't have a single largest customer, so I guess that should not, affect that you had a very large order last year with Balatna should not affect your thinking on organic growth, I guess. Would that?
No. So, no.
Yeah. So your organic growth should continue to ramp up as as you guided, mid-single digits, despite the large orders we saw last year. Is that a correct interpretation?
So with regards to order intake, I said that we are quite confident that we will grow our order intake versus 2025, also knowing that there was this very large order of Baladna. But we haven't given any numbers here. In terms of sales growth, for this year, we are guiding organic sales growth of 5 to 7%, and in general, more than 5% over the period 2024 to 2030. So that is what I can also confirm today. Yeah.
Yeah, that's very clear. Thank you very much.
Thank you. We'll now move on to our next question. And we have a follow-up question from the line of Adrian Pell from ODDO BHF SE. Please go ahead. Your line is open.
Yeah, thanks for having me again. Actually, two very quick ones. One on the Middle East side of things. Just want to make sure that there were no issues on the supply chain or any kind of, impediments to the ability to ship in the country. So wording has not changed, I would assume. And secondly, on tariffs, I guess you are also queuing up in the line to get some refunds. I just wanted to hear a bit of an update on that situation and how it has progressed. Thank you.
Yeah, I can start with the...
Yeah, please go ahead.
Yeah, I can start with the cost inflation side. I mean, as you rightly assumed, Ariane, so there are no news in that regard. The wording has not changed. I mean, what we have seen that logistic providers were increasing their prices for transportation, but as we shared with you, we charge transportation costs directly to the customer, so we don't see an impact here for ourselves. And I mean, regarding, let's say, in general, let's say price inflation for energy-intensive raw materials, I mean, we do expect inflation coming in here or kicking in here, but we are in active dialogue with our suppliers to negotiate against these price increase requests and, I mean, counteracting these effects with targeted measures and, I mean, where necessary, also with price increases. So, and keep in mind that we also have in the project business locked in prices and on top price escalation clauses. So no change in wording, just summarizing again what we told you so far.
Then regarding the refund, to be honest, Adrian, I have no new news here. I haven't heard anything so far, if you already got something back or not. But maybe that's something we can then also discuss on August 10th when we release our full year or Q2 numbers. Yeah.
Perfect. Thank you.
You're welcome.
There are no further questions at this time, so I'll hand the call back to Oliver for closing remarks.
I think there's one final question coming in just now.
Thank you. And our next question comes from the line of Klas Bergelind from Citi. Please go ahead. Your line is open.
Thank you. Sorry, I just want to clarify one thing there, Oliver. You said that obviously you talked about margin progression, further margin progression, but to your knowledge, there is nothing that is boosting the margin or profits. Maybe this is margin neutral actually, but there's nothing that is boosting profits from the tariff refunds.
No.
Yeah, it would be great to get some clarity when you report if EBITDA had something of that in it later. Yeah.
Sure. Yeah. No, we will update you clearly. Yeah. But
thank you.
No funding so far to be expected in Q2. Yeah.
Thank you. There are no further questions at this time, so I'll hand the call back to Oliver for closing remarks.
Yeah, thanks again, Mel, and the analysts and investors for participating all. And I think, as you have heard, we are and remain very positive for our Q2 and also full year 2026 performance. And with the end of this call, we will start our quiet period and are already very much looking forward to talking to you again on the 10th of August, the release of our Q2 2026 number. So, also from the entire innovation team of GEA, and talk to you soon in August. Bye-bye.
This concludes today's conference call. Thank you for participating. You may now disconnect. Speakers, please stand by.